Hello, I'm Curt Long, Vice President of Data and Research and Chief Economist for America's Credit Unions. For this month's economic update, I'm going to talk about the investment boom in artificial intelligence, what it means for the economy, where companies are in terms of adoption, and how credit unions can stay on top of this potentially revolutionary technology. It would be too strong of a statement to say that AI investments are keeping the economy afloat, but it's probably not too far off. Certainly, the stock market is benefiting from the extraordinary performance of a few key tech companies. There's an adage that the stock market is not the economy, but in this case, it might be. Those companies are making enormous investments, and it's helping to offset weaker parts of the economy. This chart shows corporate non-housing investment. Overall, it's fading and has been since the Federal Reserve began raising interest rates in 2022. Overall investment growth has slowed, but remains positive. But notice what happens when we exclude categories like computers and software. These categories are where all the investment in data centers and AI resides. When we take out those categories, investment growth slips below zero. In fact, in the last quarter, it's estimated that AI and data center investments contributed more to headline GDP growth than consumers did. Now let's take a look at how quickly companies are adopting AI into their production processes. This data from a relatively new census survey samples 200,000 businesses every 2 weeks. Included in the survey are a couple of questions on AI. Respondents are asked whether they have used AI over the past 2 weeks in the production of goods and services. Then they're asked whether they plan to use AI in the production processes in the next 6 months. The results show steady increases in both measures. As of early September, 9% of businesses were using AI, while 14% plan to use it in the next 6 months. However, analysts are noting that while an increasing number of companies are planning to adopt AI, actual adoption has plateaued over the past 3 months at just under 10%. Now let's drill down into the financial sector. When we do, we find 15% of financial sector firms are using AI right now. However, following the general pattern, that rise in adoption has stalled. The broader story here is that both realized and planned adoption have doubled in the past 12 months. The rising adoption of AI comes at a time of increasing concern over the labor market. Hiring is weak and unemployment is beginning to rise. A lot of the emerging weakness in the labor market is concentrated with young workers. Over the past 3 months, the unemployment rate for workers in their early 20s rose by a full percentage point to 9.2%. For workers aged 25 to 54, it's remained steady at 3.6%. Recent studies are showing that some of these labor market developments could be attributed to AI. Using private employment data, researchers at Stanford University concluded that the adoption of AI has reduced employment of young workers in the most AI-exposed occupations by 13%. If that's true, institutional knowledge will become very valuable in AI-exposed sectors. A link to the study is in the description. Finally, let's look at hiring rates, both for the overall economy and for the financial sector. Overall hiring sits at the lowest level since 2013. The finance and insurance sector tends to have a lower hiring rate than the rest of the economy, but it has shown greater stability relative to the overall trend. This is something to watch in the future as researchers view the finance industry as one of the most exposed to AI-led labor augmentation and replacement. We do seem to be at an inflection point with AI. There's still plenty of optimism about its potential, and investments in the technology are driving economic growth. But there is also a growing anxiety, both from AI skeptics who doubt it will live up to the hype, and from those who fear its potential power over the economy and society as a whole. Credit unions are generally not risking their members' money on unproven, emerging technology. But that doesn't mean the industry should be left on the sidelines. We continue offering education on AI and how you can use it to serve your members. There's a lot of value in AI, along with plenty of risks too. We have resources to help you make an informed decision. There are a lot of questions about how long this AI run will last, both in the stock market and in the workplace. One thing is certain, we'll all be talking about it. That'll do it for this month's Economic Update video. Thanks for watching, and we'll see you next time.